Alright, so yesterday we have slightly touched the element of a report, CFTC, on cryptocurrencies. But it looks like underneath there are many more things we need to dive deep into. As there are anti-money laundering procedures that has been turned to a Binance procedures that don't work out. Could it be a Trojan horse? Those underneath actions that Binance has just taken to the spotlight, can it be a Trojan horse for the whole sector? We will cover this topic today, as well as about S&P 500, whether we are overvalued or undervalued, and what's the sentiment right now that may prompt us back or forth. And, as always, the most updated elements on crypto and stock market as a whole, along the steepening inverted yield curve. So there are many things out of the regulated and unregulated market to go through. So welcome and see you at first episode after an intro. Alright, so economy view is something that we need to just reel over, and so 10-year treasury constant maturity minus 2-year treasury constant maturity is right now inverting itself, and historically the re-steepening of the 10-year minus 2 years USD yield curve from the trough has preceded recessions. Could this time be different? I wouldn't really bet against probability. Right now, as we do know, the likelihood of a recession coming up is higher than ever, and that's why Fed don't want to show up that something bad is going on underneath, and they will stay track to what's going on with the trajectory of interest rate hikes. Right now, the rate on the maturity surged 25 basis points on Monday as investor sentiment improved, but it's still down about 100 basis points from earlier this month. So it looks like it's much less probable to see rate cuts this year. Right now, the playbook is where the economy on one way might be rescued from recession hit, but we don't find it this year to happen. Maybe GDP will take a drawdown as expected by conference board reports in third and fourth quarter, but the whole recession phase may commence with the new year to come. So this very low interest rate cycle where we have been keeping it at zero or even negative levels, in some instances, and that this balance that it has grown, just given the outlook for this non-banks or just this kind of a very shady, some shady institutions as SVB was, is resembling more like a tapeworms in a sick animal, and may come out right after this surgery process will eventually commence. So also, is it right now a good time to buy stocks? Observing this trajectory, the monetary conditions indicator right now is cratering. It's cratering, and it means that this gauge that just indicating the tightness of monetary conditions is lowering down, and as we do know, that's a leading indicator that may push the evaluations of S&P 500 versus treasuries down. So it looks like bonds might be properly evaluated right now, but stocks are possibly yet to follow. And that's something you need to really ponder over when just deciding to invest in regulated market. So this proximity of a steep global economic recession might be just closer and getting closer every trading and economic day. Um, what about the debt ceiling? As the debt ceiling right now is the deal we are about to reach or agree on in days to come, but as it takes that long time, it would indicate that we have some troubles with pushing this forward. So right now, when we have such a turmoil in economy, we need some liquidity, but we already injected over 300 billion into economy, and that might be enough by some indicators that any other threshold would really add up to this very high inflationary gauges that right now are exceeding the interest rate, the core interest rate of Fed, and this difficulty with this banking sector also, given many of the instances prompt to really focus on banking system rather than the increasing the threshold of a debt held by the public. So if the debt ceiling, on the other hand, won't be reached and won't be raised, we might be in some way unable to issue or auction any more treasury bills, bonds, or notes. And that's the period of the economy where would need to really forget possibly about the very spectacular economic growth, and the bull cycle might be still far away. So also the sentiment hasn't been good of lately, but as we do know, usually this very bad consumer confidence is a leading indicator of rising stocks. So we might go through recession in the economy, but the stock market may perform well in contrary. So this chart is showing that still we are under the water in terms of balance, expecting a gain of confidence divided to subsequent 12-month return, but usually it was a reversal indicator that, or I would say the counter indicator that will have some indicative power to buying or selling stocks. So this one thing is also to study and to monitor, but talking about this, sometimes it was just seek for the negative sentiment among the market, and whenever that that reappeared, there was more likelihood of reversal in terms of sentiment rather than deepening it even further, and having this investors negativity even more deeply entrenched into the underneath levels. So that's about keeping the brighter side of life. just to not be so pessimistic. In terms of market outlook, let's find out what's right here. A sentiment also from consumer sentiment also is reflected on sentiment indicator from Goldman Sachs. So that's what measures stock positioning across retail, institutional, and foreign investors versus the past 12 months. And that's what I need to also study as well. Right now, we do know that the market performance in this year wasn't that well as during the fourth quarter of 2022, at least on value stocks. But the technology one is thriving. But just wonder about this. It's taking positioning, taking into account this positioning. It's typically something we need to play against, as the majority on the markets usually are wrong. So I do expect that we may reverse this in the nearest future and probably shake out those bears. But for now, this tendency is looking like deepening even further. In terms of most important indexes, just have a look at what we got right here. So SPX right here is trying to get out of this trench and giving out this very strong bearish after Fed's candle. It would for now leave us in a consolidation mode with a possible downside after giving this lower highs and lower lows structure. So S&P 500 right now is trying to get out of this very important 4,000s level, but right now given out that we are right now zigzagging within this consolidation with lower lows, possibly building, it will be a kind of a struggle for SPX. Right now, the next possible level is somewhere between 3,900 and even 38.5 if nothing happen otherwise. All right, so let's get back to our presentation, and I need you to hang on a while. All right, so there we go. Crypto outlook. So let's talk over this CFTC report. So we've seen that this report that has been published on Monday has brought many controversies to the sector. Most of the problems that CFTC has with Binance are related to improper KYC for American users and lack of AML reporting. The evidence related to the allegations is quite daunting, and Binance has rather low chances defending against them. This could lead to complaints against every crypto exchange, non-KYC withdrawals, and lack of AML reporting. And that may prove to be another attack on the whole crypto industry. But the real problems might be with in-house trading. Binance had 300 in-house trading accounts, and there is a probability of front-running user accounts, which unfortunately is common practice amongst exchanges. But apparently, according to some quants, it was nothing in comparison to the front running that occurred on FTX. So something it was mostly backstopping. There might be other problems though, like market participants connected with Binance having conditions and info not available for other players. So if you just wondering about front running, it's a advanced knowledge of a specific order, and backstopping is act of providing last report support or security. So those are the main concerns against Binance. In terms of possible pros, CFTC lawsuit against Binance explicitly calls Bitcoin, Ethereum, Litecoin, USDT, and BUSD commodities, which could be significant for the industry and the future of certain projects like Ripple, which propelled its price by around 20%. This could be viewed as a counter-argument to the SEC's recent view that Ethereum became more like a security when it switched proof of stake. So mainly it's a, I would say, something that also pushed many evaluations of crypto higher. Right now, Bitcoin and Ethereum are rising. We also assume something that might be called a ripple effect, where on the rumors of positive the CFTC report outcome, XRP already has risen, and that's what we've noticed today on during trading sessions and during yesterday's trading sessions. So that's very interesting to watch how it may perform in the future. The question is also, could it be an end of a bear market? Are this all regulatory things are over? Right now, it's very difficult to assess whether everything has been tackled. We don't have a clear guidance on many things, but when talking about just reversing this bad trends right now, this might be a final call. So just look at this on a slides. I'm depicting the charts just been touched by a few crypto Twitter accounts, and we can find that this diagonal line that been converged with this bearish tendencies has been on a monthly basis crossed, and it means that there is a fuel to move up higher. Right now we are just ending up a cycle of around 300 over 300 days from market troughs and from cycles troughs, and that would also indicate that we are right now getting out of this negativity mode into more leaning attitude toward a positivity. So also I'm just leaving those graphs to you, and just let me know down in the comment what you think about it. Won't Bitcoin never go down again to 20k, or are we just about to test new lows, or at least equal or align those of November and December? So about market movers, let's find out what may move the markets this week that we haven't talked over yet. So on Tuesday we had this business confidence out of France, and wholesale inventories from US, but there weren't many of important events back then. In terms of GfK consumer confidence on from Germany, it's at minus 29.5, so it's not much better, but still we are getting out slightly but surely from this negativity of the cycle. And tomorrow we have a inflation rate and PMIs from China, along with personal income and PCs from US on Friday. In terms of earnings calendar, just find out right now we are after Micron Technology publication that surprised the market. That's why the US 100 slumped that much. It was a surprise of around minus 160 percentage points. So it was very difficult to swallow for many of technology and Nasdaq bulls. In terms of today, we have Cintas Corporation, and tomorrow we will have a National Beverage Corporation, Gerdau, and Yamana Gold, out of the most capitalized companies. In terms of other things, I need to just indicate is that this operating S&P 500 operating earnings per share forecasts, YII forecasts, indicating that we are still expecting positive earnings in the future. So any deviation from that forecast would be a negative surprise for the market. So that would mean, and that may result with a kind of abnormal sell-off. So towards this year, we don't expect much uprise, but during 2024, during that span, we expect this earnings projections to reach eventually 250 being clear. So that's why we can find it in a longer horizon. Those expectations toward a market are still relatively high. In terms of trade idea, as always, we are just recently been looking at one of the most volatile market, that is US 100. Just look at this. What a price action after market open. After this consolidation, we can find that we have just smashed any type of bears, and we are relentlessly heading towards another very important point, that there is a this resistance at 12.78. It will be very difficult to get through, as right now this overhead supply is kind of a prevalent. But if we manage to get out, it will be literally next ceiling at 12.90, and right after at 12.95. So the upside is very limited by now, and I would expect rather to market to reverse from that levels. So that's about US 100, and US 100 right now is trying to revert. So by now, I would say that US 100 would be rather reverting the tendency than continue this one, and that's why I'm rather thinking of putting a sell orders, but it may remain within this area for a while before eventually going downwards. So US 100 right now is on the possible short on the possible short categorization of mine. So right now I'm looking at the chart. I would really just observe that latest price action, and if we won't have any type of strength given this rally forward, I would just hit some of a that bet that will be against of the previous trajectory. So right now, the one thing I would better do is just wait for the stabilization of a course, and right after you may consider betting against it if the price action won't favor both in any side. So we are just forming a inverted hammer that might be the one that may stop the bulls from going up, but as I mentioned, just hang on a little while, and possibly this area would be a nice area to take a short side of a trade. So that's it in today's episode. Always remember about being cautious when making bets. I'm very glad you decided to turn on the Blockrevision TV, and I'm inviting you for tomorrow's episode. Thank you.